Good morning, everybody. My name is Richard Garry, and I'm the Chief Commercial Officer with Gamma. Thanks for taking the time to attend our first of 3 events that are happening over the next few weeks. What I'm going to do is just share a screen now. Hopefully everyone can see that. So today we're going to focus on climate risk and regulatory change for Ireland and explore what data is available that can help us understand the impact of climate change. If you're free on the 2nd of December, we have our second event, which was a similar workshop to this, but it's going to explore the impact of climate change on the UK and the regulatory sort of roadmap in the UK. On the 7th, we'll return to Ireland for the launch of Gamma's latest innovation, AddressLink, which is a single source of building level data for the island of Ireland. We hope that this will go to become, I suppose, the data source for property level data in a similar way that the ERCO database is for addresses. So back to today, I'm joined by Dr. James Fitton of UCC, who's going to give us an update on what we can expect from climate change over the coming decades. Then my colleague Richard Cantwell, our principal geospatial consultant and in-house climate change expert, talk about the various data sets that are available today and that can help us, I suppose, understand the impact of climate change and understand how it'll impact your businesses. And Johnny Maddamore of First Derivative will give us an overview of the regulations that we should be aware of when it comes to reporting on climate change. So most of you probably know who Gamma are, but for those that are unfamiliar with what we do, I'll give you a brief overview. Gamma is a cloud-hosted solutions provider that integrates software, data, and services to help our clients reduce risk through location intelligence. I always think that's a bit of a mouthful, but what it really means is that we provide solutions to, in this example here, the insurance sector, which includes geocoding, peril data like flood, subsidence, and crime, and also pre-fill building level data from AddressLink, our AddressLink platform, which we're going to be talking about in a few weeks' time. And all of our data is accessible through web services, and then it can be visualized within our geo-underwriting web mapping tool, Peril Finder. As such, I think we're probably ideally placed to consume climate change data and then develop solutions that will help our clients understand that over the coming years, or even now, because a lot of the data is already available. So today's event will focus on the impact of climate change in relation to flooding, storms. We'll also discuss ground movement. So this is an area that's probably not thought about in the context of climate change, but more frequent droughts followed by heavy rain can lead to what's called shrink swell, and this can cause damage to house foundations. Now, it's a major issue in the UK, especially around London, where there's a particular type of soil, but I think it could become an issue in Ireland over the next few years, so it's probably just something to keep an eye on. And while it focuses on climate change, on the insurance sector, the applications and impacts aren't limited to insurance. We've recently undertaken a project for a major bank to understand the impact of climate change on the mortgage book and property-backed loan portfolios. We see applications for, I think, any organization that has physical assets, whether it's a local authority, a utility company, telco, or even, let's say, a large retailer with lots of properties across the country. So any organization that owns or manages property is probably keen to understand the risks that might affect that property. So in the past, it could be vandalism, crime, storm, burglaries, trips and falls. So all of these have insurance applications, and others might just need to be managed. And I suppose climate change is yet another worry for businesses. The good news is that the science and data is available now that can help. So my colleague Richard Cantwell will talk about the data that's available from our partners like JBA Risk, Ambiental and MetSwift that can help. Before we start talking about climate change, I suppose there's probably a few things to understand. Obviously, none of us have a crystal ball and can see the future, but what we do have in the case of climate change is a huge amount of data that's been gathered from various different sources and academic research papers. And this information has been pulled together by the IPCC, the Intergovernmental Panel on Climate Change. So their recent report, which was published earlier this year, is, I suppose, stark reading. It's also, there's a lot of reading in it, but there's a good summary, a summary for policymakers. There's a link on the slide here that's certainly worth having a look at. Now, the summary, I think, is still about 20 or 30 pages, but it gives you a good overview of what's potentially going to happen. And the key thing is that, I suppose, the main point that starts off the summary is it's unequivocal that human influence has warmed the atmosphere and ocean and land. So what can we do to understand or try to understand and quantify this change and the associated risks? When we look at change or climate change, there are two things to consider. What is likely to happen and then when will it happen? So these are quite easy to ask, but they're actually very difficult to answer. But I suppose one of the things to just understand in relation to this is that there's various different scenarios that have been modeled out into the future. So these scenarios are usually referred to as RCPs, representative concentration pathways, which is a greenhouse gas concentration trajectory, which is adopted by the IPCC. There's lots of different pathways, and actually RCPs have been sort of subsumed into another acronym, SSPs, which James will talk about later. But these pathways, they do is they model out different potential climate futures, depending on the concentration of greenhouse gas in the atmosphere that'll be emitted over the years to come. And these generally range from, as I said, there's lots of pathways, but the four that are sort of talked about from an RCP perspective, and some of these are different when we talk about SSPs that James will mention later. The key ones are 2.6, 4.5, 6, and 8.5. And really, they say, okay, if it's 2.6, that means is there's going to be stringent cuts, so to everything from carbon dioxide, sulfur dioxide, methane gas. It's probably unlikely that these will happen, so this is probably an unlikely scenario. Then you have intermediate scenarios like 4.5 and 6, where the emissions peak at a certain point in the future, maybe 2040, 2080, and then they decline, but temperatures probably still continue to rise. And then you have like a worst case scenario where emissions continue throughout the century. That's your 8.5. So what does this mean for you? It means that there's a lot to consider, I suppose, and a lot of data needed to be understood. Now, most of the regulators have been proactive in deciding what you need to report on. And being regulators, they'll tell you what to do. But thankfully, I suppose our partners like JBA and Ambiental have developed out models that translate these RCPs into flood models. And then we can consume them and use that to measure the impact of climate change. And in this case, in particular focus would be on flooding. And what Gamma have done is we've linked this data in Ireland across to Aircode so we can map the data. So once we have the data in this format, we can begin to analyze the data for our clients. And there's probably a few issues at play here, depending on why or what you want to measure. So you may want to assess the impact of climate change on your existing book of business. So then the first step is to examine your existing policies across your various books of business, be it residential, commercial lines, or agriculture, and then see if you were over or underexposed compared to national figures, or even if there's some geographical bias in the book. And this can be measured, and we can do this for you under the different scenarios and return the data and/or produce a report. Another requirement may be to integrate climate change data into business as usual processes to understand risk and policy inception. This can be achieved by building the data into everyday processes through accessing a third-party data model from our partners. However, this data, I suppose, it's complex and it's large. You're talking about gigabytes of data, and it can be difficult to use. So what we've done is we take it in, we manage it on your behalf, and then provide it out as web services and provide just the data that you need. And then we look after updating it and managing the data. There may also be another report to this are required in terms of regulatory reporting. So as you'll see later on today, there's more and more requirements in this space, and different regulators require different information. And again, Gamma can help by encoding data and producing reports as needed. And there's probably a fourth area as well for insurers just to consider, and that's to understand the impact of climate change on investments. So is that shopping centre or office block in an area that could be underwater in 30 years' time? Or should I invest in that new development in the docklands or along the coast? And that's really where Gamma's Peril Finder solution can allow decision makers to assess the risk before committing large amounts of capital. So it's probably a good time to hand over to our first speaker, James. So Dr. James Fitton is a senior postdoctoral researcher at Science Foundation Ireland Research Centre for Energy, Climate and Marine, which is a part of the Environmental Research Institute based in UCC. James leads the Climate Ireland project, which is an online resource that brings together science, policy and practice to support climate adaptation. James has a background in climate risks, GIS and remote sensing, has worked across Scotland, Denmark and Ireland. So I think he's ideally placed to give us an update on everything that's related to that's happening in climate change. I'll hand you over now.
Great. Thank you, Richard, and good morning, everyone. I'll just share my screen. Can you just confirm you can see that, Richard?
Yeah, perfect, yeah.
Thank you. Thanks for the introduction. And yes, my name is James Fitton. I work in Moray and specifically on the Climate Ireland project, working with local government and the sectors to inform their adaptation. And so this is a very timely event because I think obviously there's been a lot of media coverage in terms of climate change recently with COP26. But I want to just begin today by just talking about the current and future effects of climate change in Ireland. I'll start though by setting the global picture, talking about the global observations of climate change, so what has happened in the past, and also then look into the future. And I'll do that same thing for Ireland as well, looking at the current and the future. Then I'll look a bit more onto the climate impact. So what does climate change actually mean in terms of affecting the way our assets and the way we live? And then finally, just very, very briefly, summing up the COP26 in Glasgow. What did it all mean? There was a lot of media coverage, but sometimes it was difficult to get the message out of the noise of all the media coverage. So I'll just very briefly touch on what COP26 has done. So climate change. What do we actually mean when we're talking about climate change? In essence, it's the warming of the globe. And this is a chart from the IPCC AR6, the summary for policymakers, which Richard mentioned. And I'd strongly advise anyone to have a read of that report if they want to get an understanding of the science of climate change. And what this graph shows is the last 2,000 years. And within the last majority of that period, our reconstructed time series of the temperature from tree rings, from ice cores, shows that the temperature has roughly stayed about the same, apart from a little dip in the 1500s, 1600s, which is sometimes called the mini ice age. But we've relatively been quite a stable temperature globally. Then in that more recent period, 1850 onwards to present day, you'll see we have this massive sort of uptick in the global temperatures. This is sometimes called the hockey stick graph. And this also coincides with our period of observed change. So this is where we've got instrumentation actually monitoring the daily weather and therefore the climate. And therefore globally, we've seen this approximately about a degrees warming over the last 2,000 years or so, or the actual warming has been in the last 200 years. And why has this warming occurred? When about 1760 was the start of the Industrial Revolution, and part of that required burning a huge amounts of fossil fuels. Initially, it was coal was the main fossil fuel that was used to power the Industrial Revolution, and then progressively it moved on to oil and gas. And this burning of the fossil fuels released carbon dioxide, CO2, as well as methane and other greenhouse gases, which essentially form a blanket around the Earth, causing a greenhouse gas effect. So what this means is that when the heat or the energy from the sun enters the Earth, it's very difficult for it to leave again. And so we get this progressive warming. And occasionally people will say, well, the climate has always changed if we go back into the history of the Earth, and that is very true. It has changed. There are natural processes at work which change the climate. However, this graph on the right-hand side, you can see on the bottom there in the green line, shows the simulated natural processes. So if you take out the human influence, where would the temperature be? And you can essentially see that it's very stable. It's about that 0 degree line. So very minor changes in the actual global temperatures. If you then simulate the human activity and also the observed record, you'll see that there's this increased heating around the globe, approximately about a degree. So it is unequivocal that it is human activity that has caused the heating of the globe and therefore the climate change issues that we face. And in terms of the future, Richard started talking a bit about these projections and what climate change means for the future. And we have a number of different scenarios and lines that will depict where we'll end up in 2100, the end of the century. And he mentioned RCPs, which are the representative concentration pathways. And these are the 8.5, the 7, the 4.5, the 2.6, and the 1.9. The actual units are actually watts per meter squared. So it would be 8.5 watts per meter squared, which is essentially a measure of the energy that's hitting the surface of the Earth. So the higher the number, the more energy that we have. Then we also have these shared socioeconomic pathways that have been used within the AR6 report, the SSPs. And they essentially simulate how the globe will evolve in terms of our socioeconomics, whether that's population change, economics, but also aspects in terms of geopolitics and the collaboration between countries globally. Do we end up in a situation where individual countries break away from certain pacts and therefore go out on their own, and therefore we don't have this global collaboration to limit our elements of heat? So that would be your SSP 5, for example. But then we have the SSP1 scenario where lots of collaboration, lots of action being taken, and that limits our heating going forward. But as you can see, even in our best case scenario, we're still looking at warming of about 1.5 degrees approximately. And in that worst case scenario, going up to just under 5 degrees of heating, which is a particularly bad situation to be in. Within the Irish context, has Ireland differed from what's going on in the globe? There's a report that was produced last year, The Status of Ireland's Climate, by Camara Garcia and Dwyer, published by the EPA. And we have a tool on Climate Ireland which summarizes this report as well. And just an example there from the surface air temperature climate variable, you can see that the points in terms of the actual yearly data, but the overall trend over the last 120 years has been that of a warming trend. And we have a warming of approximately 0.9 degrees over that last 120 years. And so this shows that Ireland is on track. It is warming in the same way that the globe is, and there are other climate variables as well, which are following that global trajectory in terms of our climate. So climate change is very much an issue in Ireland, and we are following that global picture. And what about the future within Ireland? Again, a report from the EPA, the Nolan and Flanagan report from 2020, which undertook some climate projection work, showed that the mean temperature for the RCP 4.5, so that's our middle climate scenario, in Ireland, we're looking at about a degree to 1.2 degrees of warming by the middle of this century. And then in that high-end scenario, that 8.5 scenario, looking at between 1.3 to 1.6 degrees. So again, in line with our global trends. So what does this mean for the globe and for Ireland? And this is a chart, it's a busy chart, but it is an excellent chart that summarizes the global impacts. But for the purposes of today, I'm just going to flip it on its side to make it easier for us to read. What we expect to see globally and also within Ireland is this extreme heat. So heat waves are going to become more frequent and more intense. And the work from Nolan and Flanagan shows this as well, that within that middle scenario, maybe in the north of Ireland, this isn't going to be such a huge issue, but certainly in the south, we're looking at potentially 8 days within a 20-year period will be, 8 heat waves within a 20-year period. So that's maybe one every other year approximately. But in that higher end scenario, we're looking at about 15 heat waves over a 20-year period. So almost one a year in terms of the heat wave. So that would essentially mean that is the normal summer would be a heat wave condition. And if we go on, mean precipitation, the change in the actual amount of rainfall we'll have in the year will increase for some annually, but also in different months will have different impacts. River flooding, heavy precipitation and pluvial flooding, so those flash flood events. And if we have heavy rainfall, that contributes to landslides and also bog slides, so potentially get an increase in landslide hazards. But also on the flip side, hydrological droughts and agricultural and ecological droughts will also occur. And droughts and heat wave in combination create the perfect conditions for fire. And so in Ireland, we'd expect to see wildfires also increasing in frequency. In terms of severe windstorms, the actual information on the science on windstorms is quite limited at the moment, with quite a lot of uncertainty in terms of the increase in number of windstorm events. But certainly there's evidence that the intensity of windstorms will increase. So if we have a storm event, we might have the same number as we did previously, but when they do arrive, the wind speeds will be a lot faster than they were previously. And Ireland being coastal, of course, will have issues related to the relative sea level rise that are expected from climate change, coastal flooding and coastal erosion. And just to set the scene in terms of the very long-term picture, I know many of you aren't looking along these timescales, but if we look at global mean sea level relative to the 1900s in terms of our scenario, by the end of the century, we're looking at between 0.5 and 1 meter of sea level rise. But if we stretch this out even further to 2300, I know this is quite conceptually difficult to do 250 years in the future. There is situations or scenarios where we're looking at 4, 5, 6 meters, and in a very worst case scenario in terms of a Antarctic ice sheet collapse, we're looking at 15 meters of sea level rise, if not more. So this is very much an issue to deal with now, but significant long-term problem that we have to deal with as well. And this is where working with local authorities and sectors in terms of their planning, they'll obviously have to consider on a slightly longer timescales than we can necessarily today. And finally, I just want to summarize the COP26 work that was, or event that was taking place recently. In COP21 in Paris, there was an agreement that was taken or agreed globally. And this agreement encouraged countries to take action to keep global temperature rise in this century well below 2 degrees above pre-industrial levels, and to pursue efforts to limit temperature increase even further to 1.5 degrees. So this is where that 1.5 degrees that you you may see a lot in the media comes from. And in Glasgow, one of the aims was to finalise the Paris rulebook, essentially the detailed rules that make that Paris Agreement operational and achievable. And this is just a summary from the Climate Action Tracker organisation. You can see we're about 1.2 degrees of warming currently. Our policies and actions that are in place at the moment, we'd expect to see warming of 2.7 degrees by the end of the century, 2.4 degrees if some of the 2030 targets are fully implemented and agreed, 2.1 degrees of warming if the full implementation and some of the more binding agreements and targets are followed. And then finally, in our most optimistic scenario, 1.8 degrees. And so that's if everything happens that's supposed to happen. And so we're still above this 1.5 degree warming. So a big issue that we still need to deal with in terms of our warming, but certainly progress has been made at COP, certainly. So in conclusion, the human influence has definitely warmed the atmosphere, the ocean, and the land. That's unequivocal. Hazards will become more frequent and more intense, so the return period of hazard events will reduce. And finally, what do we need to do? We need to adapt to the current and future climate. And so this is the process of adaptation. We also need to reduce our emissions to limit the future global temperature. And that's the mitigation. So in combination, mitigation and adaptation are climate action. Thank you.
That's great. Thanks for that, James. I suppose it just on that, are these things happening now? Is this a future problem, or should we be worrying about it now, or some of this now?
Yeah, I think it's tricky sometimes to think of climate change as being this far off issue that we don't have to deal with, but it is very much something that is happening now. We've got those observations of the temperature change in Ireland, but also if you look at globally, a number of weather events are being attributed to climate change. So if you think last year, there was the big heat wave event in Canada, where it broke temperature records by 5 degrees or so. That's very much been an issue exacerbated by climate change. So this is very much a now and a future problem.
Okay. Right. Well, we might come back to that. What I do now actually is pass you across to Richard Cantwell, who is our principal consultant in Gamma, who will provide an overview of the data landscape for assessing the impacts of climate change. Look at some of the perils and data sources for Ireland. While Richard's getting set there, he's a geographer with 25 years experience working with maps and data and spatial analysis. And because he can't get enough of maps and data in his spare time, he actually is one of Ireland's foremost contributors to OpenStreetMap. And he's also serves on the Irish board of OpenStreetMap. And he is, I suppose, widely known across the GIS community and heavily involved with Elogi as well. Over to you, Richard.
Thank you, Richard. So I'm taking kind of building on what James has been saying there, and looking at the data and models that we have available to us to support analysis of these changes in the climate and how they're going to impact on properties. And there's a number of things that jumped out from the IPC report that that was referred to in some detail by James there. I was reading through one section on it, which was talking about the special report on the ocean and cryosphere and the changing climate report, the SROCC. And one of the things that jumped out at me on that is that they were saying that what is currently a 1 in 100 year extreme sea level height will be expected once or even multiple times per year in future in many locations. And I think this plays out across a number of different risks, where things that used to be rare are going to become much more common. And this is, for those of us who are configuring our approaches and attitudes to risk, we may currently look at a 1 in 100 year event and say that's about as much risk as we want. those 1 in 100 year events, whether it's related to coastal flood or storm damage or whatever it might be, those events are going to become much more common as a result of climate change. I also looked through the interactive atlas. Again, it's another part. James put out some elements of it already. We're looking at Northern Europe in particular. The interactive atlas is available for about 10 or 15 regions around the world, and it pulls out particular climate change aspects that are, some of them are very relevant here for us. Looking at, as James has already mentioned, there's a high confidence of increase in mean air temperature and extreme heat. The cold spells are likely to decrease, whereas mean precipitation and heavy precipitation and pluvial flood in Northern Europe, which is basically Ireland, the UK, Scandinavia, again, they're all going to increase. Severe windstorms, there's a medium confidence of an increase in there. So there's some uncertainty, as James mentioned, about the windstorms. But then again, obviously with coastal, relative sea level, coastal flood and coastal erosion, again, high confidence of increases in all of those. And we can see, again, the interactive atlas is quite user friendly. You can go in there and select the particular combinations of climate change aspects that you want to look at and see the trends across the globe. But one thing that we've been working on internally and with our partners in JBA and in Ambiental is looking at climate change and flood modelling. We've carried out our own research. We wrote a white paper recently on just a desktop exercise really on looking at coastal flooding and climate change in Ireland, where we modelled out a 1 metre sea level rise with an additional 75 centimetres of sea height due to an extreme event, and that means a storm surge and onshore winds driving high levels of water onshore. And these are at different heights around the coastline due to local factors, whether it's the shape of the coastline, the direction of prevailing winds, and so on and so forth. But we're able to look at the potential cost of repairing damage at residential and commercial properties in those areas. And unsurprisingly, Dublin is an area that could, in an event like that, be severely impacted, potentially up to over 600 million of damage can be caused by a single event. Other counties are also majorly impacted. Louth actually has nearly a fifth of the properties in the county are at risk, and there's also quite a lot of risk in Clare and Limerick because of the fact that a lot of the properties there are up the Shannon estuary, and estuaries tend to see large amounts of sea level or large amounts of storm surge height. But of course, we're not the only people working in this area. This is just a desktop exercise, a geological survey, carrying out research just recently published coastal vulnerability mapping, initially focusing on an area from, I think it was Donabate or Portrane down to Arklow, and they will be extending this around the coastline in the coming years. And again, they're looking at which areas are vulnerable, and in particular vulnerabilities along the Wicklow coastline and in the kind of Portmarnock area and Sandymount and so on in Dublin. And they've also looked at potential flooding in areas, that broadly agrees with a lot of the other models that you're seeing out there from, ourselves and from people giving a general broad overview. The broad overviews are very good and well for looking at regional analysis and kind of giving ballpark figures to things. But when you want to get down to the nitty gritty of looking at what's going to happen at the individual property level, well, that's when you need to bring in data from the modelers who specialize in this area. So again, we partner with both JBA and Ambiental, so we can look at properties here, for example, which are going to see increases in their flood score over the coming years. They're already maybe at risk of flooding, but that risk is going to significantly increase at these particular properties over time as climate changes. But there's other data to be considering in this area as well. I mean, flooding is obviously a major consideration, but we're also looking at storms, wind speeds, and looking at how these might impact on buildings. And here, for example, we have direct feeds into the Ordnance Survey in Ireland. We're partners with those. We've partnered with the Ordnance Survey in Northern Ireland. And we can pull out building data. And then another partner of ours, Blue Sky, has trees locations and canopies and crowns, how tall the trees are, and so on and so forth. And we can very quickly pull out the buildings, flag them in orange, where there is a tree within a certain distance, say 10 meters of the buildings is potentially at risk. Or red ones, there's a building here that is within 3 meters of the building. So, you know, so we can look at in a case like this where there's a storm, these are buildings that are potentially at risk from tree damage. And trees also feed into, when married with soils, can cause subsidence at buildings. And this is an area that we are actively developing. We already have a subsidence model over in Ireland, but we're going to be extending that in the near term, looking more at soil data, because we have partners in the UK who work with Terra Firma, who are looking at the shrink swell issues relating to certain types of soil. That hasn't been an issue in Ireland in recent times because it generally doesn't get hot for long enough for the soils to really dry out and then get wet and shrink. So they shrink when they get hot, and then they get wet and the soils expand. So this continued shrinking and swelling can cause severe damage to buildings. And indeed, in France, this kind of subsidence is more of an issue for buildings there than flooding is. So the amount of payouts for building level insurance, it tends to be subsidence caused by shrink swelling soils and other aspects like that cause larger volumes of claims than flooding. So we'll be developing this out, and also new data coming from Ordnance Survey and Schalkest in association with the EPA and the Department of Agriculture, Food and Marine around land cover. So extremely detailed, much higher resolution than anything that's been available before. And this is very useful for informing not only agricultural productivity, but also things like wildfires and, again, the soil exposure to climate change. So bringing all of these things together and presenting them in a single, easy to use interface is what we're already delivering through Peril Finder and AddressLink, and we are continuing to develop the models in that. So with that, I'll hand back to the other Richard, and if anybody has any questions, please let me know.
That's great. Thanks for that, Richard. Actually, just one question on that. I know we talk about the Republic of Ireland quite a lot. I'm assuming the data that we're talking about here is available for North and South. Is that
yes?
Correct?
Yes. Yeah. Again, our data partners in JBA, Ambiental, and Blue Sky, and others have data that is cross-border. There are some, and again, we have partnership relationships in place with the Ordnance Surveys for getting the property data, building data, address data. So yeah, most of the things will be available cross-border. There's going to be some differences because of the different territories and different standards around a few data sets, but mostly, yes, this is the AddressLink, for example, is intended to be an island of Ireland initially and extending into GB products where it's a single source for all of this.
Perfect. Great. Thanks for that. As Richard said, look, if anyone's got any questions, just drop them into the panel on the right, and we'll try to address those at the end. Just coming up to our final presentation is from Johnny Matamore, who's the Managing Director and Global Head of Risk and Sustainable Finance at First Derivative. He's over 30 years experience in financial markets and a leading proponent of open source standards, and has a high level of expertise in all aspects of sustainable finance. This includes data services, risk models, control frameworks, and reporting infrastructure. And his sustainability experience covers everything from catastrophe risk, climate risk, green securities, carbon offsets, ESG, and wider regulation. Today, Johnny's going to give us an overview on regulation in the market. Hand it over to you now, Johnny.
Thank you, Richard. Good morning, everybody. I'll just share my screen. Okay. So may I just ask, is that a full screen everybody can see?
Yeah, perfect. Yeah.
Right, okay. So today what I'm going to do is illustrate how the interests of banks, insurers, and asset managers are actually beginning to converge. For those who've worked across financial services, they'll understand the real idiosyncrasies in these industry segments. But the aspects of climate risk and wider sustainable finance are actually all pervasive and are impacting all three industries in the same way. One of the key things we do at First Derivative is position this all around a valuation exercise. If you can't, the classic thing is if you can't measure it, you can't manage it. And the key thing in all aspects of finance is we are in the business of risk management. Banks, asset managers, and insurers, that is our business. It is pricing risk. So that's going to be the core tenet of everything I talk about here. I'm going to illustrate how it's in the interests of all these industry segments to actually work towards a converged model, data, and risk management framework. So this is all about the emergence of the common interest leading to common alignment across these different segments of financial services. And it's going to be a bit of a whirlwind tour. I'm going to demonstrate that the interests are aligning around regulations, around standards, and around valuations. By regulations, I mean things such as the sustainable finance regulations in asset management, capital adequacy and solvency in banking and insurance, respectively. The standards, that's everything from TCFD for disclosure, all the way through to the actual accounting standards such as SASB and the other competing standards, which are now beginning to converge. And finally, how do we adopt this data and integrate it into our valuation models? I'm going to use throughout this a way of showing how in traditional finance, you're not going to throw it away and you're not going to replace it with sustainable finance, but you're actually going to integrate the two. And that integration comes about really through the use of common quantitative risk modeling capabilities. So I've broken it down into three sections. The first is the thesis. We're talking about the future, so we can only talk about the future with a degree of confidence. We can't talk about it with certainty. So I always call this a thesis, even if in some areas we may have very strong evidence. The second is, how do you take that thesis of the future, and what is the impact of the future, and what should we be doing? So this is our response. And we talked about adaptation, modification, and all of those are the themes. And then finally, what are the key takeaways? So I'm going to go through in the first stage what happens when you start thinking of a thesis. Generally, the way our economies work is you think about the economic theory adopted by governments and policies. You think how that's going to impact business practices, and then you go out and actually try and value assets. And this is all from the perspective of financial services. So here we go straight into the thesis. For those with any sort of economic background, you'll know that the last 100 years has been dominated really by two great figures. One was Keynes promoting a fiscal supply policy, and the other was Milton Friedman out of the Chicago School. promoting a money supply policy. Now, the state we're in the world today is, is that we've had crisis after crisis over the last 100 years, and we've got to a position now where we've pretty much exhausted all of the policies, whether or not they're fiscal or money, in their origins, and we've stretched them beyond all expectations. We've just increased debt to GDP on most countries by multiples of 10 percentage points. Many of the more mature, disciplined Western economies are approaching 100% GDP. The less fiscally disciplined, like Italy, are approaching 200%. Japan is approaching 300%. These are absurd numbers. If you look at emerging markets in the past, 100% debt to GDP is when they pretty much fell over and entered a death spiral. So governments all around the world are clawing for a way of addressing the next crisis. And it's pretty widely accepted that the greatest threat to economic success, stability, human migration, all sorts of problems, from asset price losses all the way through to societal problems, is coming substantially from climate risk. And therefore, the response by most governments has been to look at the viability of a decarbonisation policy. And that comes through all three areas: government, treasury, and central bank. Okay, we don't know whether or not we're going to have a Milton Friedman or a Keynes yet, but surely somebody will emerge, and history will decide who that one person gets the accolade. So let's have a quick look at why this has grabbed the imagination of governments, independent policymakers, and also companies. If you look on the left, this is a sample of major events, all covered by my colleagues in this presentation. Everything from temperature right through to pandemics. And it's pretty much widely accepted that these are only increasing in intensity. So now we're looking at the responses to those, and it started largely with the UN in the early 90s. In the last decade, from 2010 forward, we've had a lot of development in the frameworks of trying to access the data, trying to create the data, TCFD being the most dominant, and this network for greening the financial system, accounting standards, all of those. And then in the last couple of years, we've suddenly had a massive surge in awareness and willingness in the financial system to actually respond to this. What is unique this time around is that we're actually seeing firms move faster than regulation, and that typically has not been a characteristic of financial services. And the main reason for that is the urgency of the issue. And the urgency is driven substantially by selfish motivation, and that is they are concerned about losing money. Now, if we look at how risk has evolved in the whole financial system, you can usefully lean on the banking regulation for capital adequacy under the Basel rules. And we didn't have banking capital adequacy as a formal framework until 1988. It was left to the idiosyncrasies of most countries. And we're about to approach the next wave of that, called Basel V. And it's pretty much accepted that Basel V will all be around quantifying climate risk and ESG themes and other associated themes with sustainability risk to address the capital adequacy. Now, that's not just true for banks, but it will also be true for the solvency in the insurance sector, and also the net asset value stability in the fund management industry. So this is a useful proxy for all three industries. Now, the next thing is capturing the trend in risk. If you go back to the beginning of risk, it was pretty sparse, pretty poor. Humans dominated the decision. We've seen in our other presentations from my colleagues, data is dominating a lot of this decision making now. A lot of it will be automated. So on the right hand side, I've tried to illustrate that with this absolute explosion in alternative unstructured data. But the real challenge is how to combine both smart machines generating insight on the data and gathering the data, and smart humans who are going to oversee the data and make decisions. Now, this is one of the most useful screens I've used in communicating how we're going to try and address this problem. On the left-hand side, you'll see traditional finance. And we've got a great assumption in traditional finance that we've got an abundance of data, economic ready for all of our models. 100 years ago, most governments weren't in this state. Companies weren't great at doing this. It's taken a good 100 years. It goes back 500 years to the first bookkeeping books. On the right-hand side, you'll see what we're trying to do on sustainable finance is achieve the same maturity and integrity in that data so it can be used in financial modeling. And we're doing it within a 10-year period, and probably trying to do it within the next 2 to 3 years if it's going to be meaningful. Now, what's interesting here is this is an economic ready problem for the financial services industry. But when we get that data, we're actually not going to throw away risk models. So we're not going to suddenly throw away Black-Scholes for option pricing or Hull and White for interest rates or Taylor series for sensitivity. We're going to use the same maths. We're going to use the similar valuations, sensitivities approaches, and we're going to integrate them into all of the existing regulations. Whether or not that's solvency in insurance, BCBS for risk aggregation in banking, or counterparty risk, all of these things are going to be the same. We're just going to have a raft of new regulations. And those regulations are going to substantially be looking at stress testing and the resilience of businesses and how you embed climate risk into all aspects of the business. It's not going to be a group risk function alone. It's going to be every line of business, every group function is going to have a risk responsibility. And this is where you see that becoming ubiquitous. In the past, lines of business and group functions only had small risk responsibilities. If you look on the right, it becomes risk is dense and ubiquitous everywhere. Now, this is the next thing about what's going to be challenging for all these financial services firms to integrate. Most of them don't have experience in the mature models of catastrophes. Insurance do, banking does not, asset management does not. That's a massive challenge for them. The next area of mature models, less mature than catastrophe, is the climate models. You actually see here there are probably 25 plus of those where there are very few catastrophe vendors that dominate. And then when you get to ESG vendors, you've got an even weaker scientific base, and you've got a greater proliferation of these vendors. Some of them are good quality, some of them are selling snake oil. Now, in terms of asset repricing in the global financial markets, it nearly always happens around the bond market. The reason being is the bond market's the whale. It's the biggest market, and it's the market from which everything else can be priced. Even equity can be priced by looking at the residual after you've paid off all the debt. But the essence here is if carbon emissions are going to be costly for firms to reduce, then it's going to be reflected in cost of funding. That will deplete the available capital left just servicing equities, and therefore returns on equities will also be repriced. And that leads to generally lower bond prices and lower equity prices to reflect the higher risk during the transition. Now, in the bond market, there's three things going on. We've got green bonds. It's a big story in the press, but it's actually a small story when it comes to valuation. The next phase is structuring carbon default swaps into bonds. Use of proceeds in green bonds doesn't give you any certainty on whether or not people are performing. Carbon default bonds would actually link the bond much more directly to the actual carbon process of decarbonizing for the issuer. And in the event that the issuer doesn't achieve that, either the coupons reprice or the principal needs to be repaid as a carbon event. But that doesn't help repricing the whole market, because these are really only relevant for new issuance bonds. So really, we've got to reprice the whole market, and that requires carbon insight into all companies, whether or not it's their direct emissions or proxies. So what's the impact of this thesis? And I'm going to do a quick whirlwind of how you actually go and implement this. We need practical solutions in the financial services industry, and they're not used to integrating this stuff. So the impact is a vision of the future where you've got traditional finance and sustainable finance coming together. And the bridge here is getting the data economic ready for the risk models. The problems to solve are actually no different than the past. We've got to get the information, design, methodology, and models right. But it's the very bottom here. What's the risk model adaptation? And I've mentioned it earlier, how financial firms integrate catastrophe risk, physical, climate, carbon curves, carbon models, carbon bond repricing, ESG data scores, carbon offsets, and reprice market and credit risk. These are huge challenges for financial services firms. And that's where the effort is going to be. And it's not going to be a 1 or 2 year effort. This is going to be ongoing for decades. This is a perspective of the risk horizons. On the left-hand side, it's the 1 day to 1 year. We've talked about how the models are looking out beyond 10 years, up to 100 years and longer. So that's not typical of the industry. We have it in actuarial work in insurance, and we have it in sovereign solvency and some asset liability management in asset management. But these are not typical time horizons. Most people are concerned with how do you translate those long-term scenarios into short-term valuations, and that's going to be the real focus, and that's going to be the focus in the bond market, which in my view is going to be the leading indicator to reprice all assets on the face of the planet. This is a sample for capital markets of where workflow is impacted. It's every touch point across here. You can replace this workflow with an insurance or an asset management workflow. This is lifted for capital markets in a bank, could be replaced with loans. And then the valuations of the bonds, you need curves, data, and the maths. Hey presto, you get that right, you can reprice risk, but it's really challenging. And then the next thing is building reference curves. This is quite a complicated process, but we actually have a proxy for this. We've actually built carbon curves in terms of credit rating curves, so they're very similar. The next thing is how do we get taxonomy in place? Taxonomy, you need it for the compliance, the line of business, market data, and you need a way of distributing that in an organization. That's a huge challenge. The next one is, can we develop carbon ratings just like credit ratings? This is a mirror image of what we do already. And then finally, what we saw in our earlier slide of bringing together all of the analytics with all of the regulations. And the data requirements are huge and diverse. And then infrastructure, cloud is going to be key to solving this. We won't be able to do it in any traditional legacy ways. It's going to be cloud first. So the takeaways, 1, 2, 3, there's going to be new regulations, huge reporting. There are going to be new standards. There's going to be a huge balance sheet impact, and there are going to be new valuations, which is going to place huge demand on quantitative common risk models. And I'll stop there. Thank you very much.
Johnny, that's great. Thanks for that.
That was a whirlwind, wasn't it?
It was a whirlwind, absolutely. Yeah, a lot to think about, and a lot of acronyms and stuff that I will need to come back to you on to try and understand myself. We are fast approaching the hour, so what I'll probably do is wrap up and see how we're getting on. There's a few questions in, but they probably need to be thought about and taken offline, so I'll respond directly to anyone that's asked questions. If you have any others, certainly drop me an email, richard.garry@gamma.ie. And look, I hope you found today informative. As I mentioned previously, we've got 2 more events coming up over the next few weeks. The 2nd of December is going to cover pretty similar topics, but for the UK, and look at the impact there. And then on the 7th, I think for our Irish clients and customers, I think the talk on the 7th is going to be of interest. So it's the launch of AddressLink, which I mentioned is our building level data repository, which will be that single source of data for the island of Ireland, which we'll be able to deliver through APIs. So we present on what data we've got in it and what our plans are for developing out AddressLink over the coming years. And we'll also be joined on the day by some of our partners from the OSI, Aircode, and Ordnance Survey Northern Ireland. So it brings us neatly up to 11 o'clock. Thanks again for attending, and we will hopefully see you at some of our other events in the future. And thanks, James, Johnny, and Richard for talking today. Bye-bye.